Well, thank goodness that the Fed is looking to act and undo some of the harm they did just before the holidays this year.
That's right. You're here on the National Real Estate Cafe with Don Getman and Gino Fronti, where we give you your daily dose of real estate and financial market updates. And today is a big day. Actually, in just a few minutes, you're gonna get a Fed decision, and we are predicting 0.5, right?
No, 0.25.
0.25.
Now, so what we're talking about is there is a chance, a small chance, that the Fed moves 0.5. If the Fed was to move a half a point, it would say, it would create a little bit of fear in the markets because it would say that the Fed knows something that we don't about the economy. The quarter is kind of undoing a little bit of the extra damage that they did by being a little too hasteful. Aggressive. But we think that a quarter move down to incentivize a little more growth is what you're going to see from the Fed.
What the goal is to continue the growth we've had. We've had growth now for 11 years. But remember, we came from the doldrums, the lowest level we have been since the Depression. So when everybody was like, oh, it usually only lasts 7 to 8 years, we're at 11 years now. But again, we came from really low places. We're still catching up. We're just catching up from 2003, basically, numbers.
But the economy is almost right back at that trend line, right where we were, right where we were on track to be, which also means that inflation adjusted, we're still 10 to 15% below where we should be at the trend line. So there's still a little bit of room for growth. I think that what you're seeing here is a precautionary move to ensure that we don't fall into the recession that everybody's been projecting.
Right, because we saw the Fed raising rates a little too aggressively. It affected mortgage rates by 0.75% at one point because of that aggression. Now it's come back down. Remember, mortgage rates are some of the lowest levels they've been in history. So again, we always tell you to take advantage of them.
That's not tied to this Fed rate decision necessarily. It has a lot to do with what's happening in Europe. It has a lot to do with the flight to safety. So mortgage rates,
the trade talks,
all that stuff. So the mortgage rates are influenced by Fed rates, but they're not directly correlated. So do not wait to buy a home. Do not wait to refinance your home. Talk to a mortgage professional like one at Finance of America to see if it's a good time for you to do something.
That's right. Again, we'll clarify one more time. This is not lowering mortgage interest rates 0.25%.
Nope.
These are borrowing terms that really affect credit cards, equity loans, car loans, that type of thing. Now, like Gino said, it can influence the markets, but it's already been basically priced into where mortgage rates are today.
So as long as you see a 1/4 point, it should be fairly uneventful. If you see a 1/2 point, then beware.
All right, you heard it right here in the National Real Estate Cafe. Again, you can get these sent right to your phone by texting NREC to number 58885 or go to us at donandgino.com.